How much of this restructuring is it something necessary that shareholders see as necessary to get things in line and get to this period of recovery at Credit Suisse?
Yeah, Danny, I think it's partly a Credit Suisse specific story, but it's partly a regional story here. We had reported that Credit Suisse was looking at potentially global job cuts, and they had pledged to accelerate some cost cuts that they had promised last year. A lot of that is coming through the technology, but it does look like job cuts are going to be a part of that expense reduction. And that brings you to the Asia side of things. I think there has been a slowdown in activity there, both on the wealth front and the investment banking front. Credit Suisse last month warned of another loss coming in the second quarter, and they specifically called out the slowdown that they've seen in Asia. And I think they're not alone in that. Other banks have seen that as well. And that's a region that's long been, the banks have been investing in that for the promise of future activity. But the more that gets pushed out, the less it makes sense to have big staffs waiting around for that activity.
I know we're reporting it's the deal making, it's the trading team, it's investment banking, but as you've been describing, it's this region as a whole that's a problem with asset management as well. Talk us through the pressures that Credit Suisse and global banks are dealing with asset management, and could we see cost cuts to come in that sector?
Yeah, I think this will not be the last we see of job cuts, at Credit Suisse. But we may also see it across the industry. There was a serious talent war last year when you had a ton of activity, and we've seen a sudden stop on the equity issuance in some pockets of debt issuance. Mergers have held up reasonably well, but you could see a slowdown there as the credit markets get a little tighter. So this may be just the beginning of kind of a pullback in the expansion we saw last year.